which was given by Mr. Rashid Faruqi. So before starting with Islamic banking system, first of all, what is Islam? Islam is a word derived from Islam, which means peace. In other words, we can say that Islamic banking system is peaceful banking system. Okay, and Islamic banking system has the same purpose as conventional banking, except that it operates in accordance with the Sharia of Islam, known as fiqh al-muamalat, Islamic rules of transaction. The basic principle of Islamic banking is the sharing of profit and loss, and the prohibition of interest. Interest is totally prohibited in Islamic banking system. So why this is prohibited? There are two reasons why this is prohibited. So first of all, if we are earning our hard-earned income and we are depositing it in a bank, okay, and we are getting interest on it, then the interest which we are getting, it is not earned by our effort. It is effortless. So Islam prohibits anything which you earn without your effort. By doing without your effort, this is effortless. And on the second hand, interest is haram in Islam. For example, if you have taken any loan from a lender and you are a debtor, and he said that the amount of interest would be like blood interest. After 1 month it will increase. And what will happen at the end? Either the person will not be able to pay the amount, or the amount will be more than the amount which he has borrowed from him, or either he will do suicide or he will kill that person. Then there are many other problems related to interest. So Islam prohibits things, and anything which is in Islam is of fact and proof, and anyone can question on that. It is related with a person's mentally, psychologically and socially. There is nothing which is only theoretical. Now, how does the Islamic banks handle loan? Islamic banks handle loan by selling the collateral security at higher than market price to the debtor, and then retaining the ownership until the loan is paid. This approach is called murabaha or ijara or iqtina. There are several other approaches used in business transactions. Islamic banks lend their money to companies by issuing floating rate interest loans. So the floating rate of interest is pegged to the company's individual rate of return. Thus, the bank's profit on the loan is equal to a certain percentage of the company's profit. Once the principal amount of the loan is repaid, the profit sharing arrangement is concluded. This practice is called musharaka. Further, mudaraba is venture capital funding of an entrepreneur who provides labor while financing is provided by the bank, so that both profit and risk are shared. Such participating arrangements between capital and labor reflect the Islamic view that the borrower must not bear all the risk cost of the failure, resulting in a balanced distribution of income. This represents the Islamic view that the borrower must not bear all the risk cost of a failure, resulting in a balanced distribution of income, and not allowing lender to monopolize the economy. Islamic banking and financing is not centered only on creditworthiness and ability to repay the loans and interest. Instead, the worthiness and profitability of a project are the most important criteria of Islamic financing, while the ability to repay the loan is subsegmented under profitability. Unlike the conventional banks, the financing of Islamic banks are restricted to only useful goods and services, and refrain from financing alcoholic beverages and tobacco and morally unacceptable things. Furthermore, at the conclusion, Islamic banks eliminate the barrier between those who save and those who invest, and bring them closer to the real market. The nature of the financial intermediation of Islamic banks significantly differs from conventional banks, and it is in harmony with real market and developmental changes in it. But Islamic banking is not growing at a greater pace because of the lack of the scholars. The scholars who know about Islamic economics and who are that run the bank according to Islamic Sharia. But the first bank was established in 1975, whose name was Dubai Islamic Bank. And the business of Islamic Bank until today's date, when it was started, when it was calculated in 2000, it was $100 billion, and in 2008 was 800 billion dollar, and in 2012 it is more than 2000 billion dollar. So if every person invests his money in Islamic banking, then first of all he will be saved from the restriction of the religion. Means it is prohibiting from you to invest money in interest granting banks. And there are many Muslims who consider that depositing money in a bank to provide interest makes their own hard-earned money as illegal. But this is not true. There are many Muslims who are crorepati, and they don't invest their money in banks. They are of fear that if they will get interest on that, then their whole money will become illegal. But this is not so true. You can, if you are getting interest on conventional banks, then you can. You should not spend your money with the niyat of that you are getting sawab on it. Okay, with the intention of that, you can give to anyone. But it is good to invest your money